Hey, good afternoon, everyone. This is Brian Greer with Tax Connects. Thank you all for joining us today. I know it's probably a little bit difficult to get going here on a Tuesday after a 3-day weekend. Hopefully, everyone enjoyed a little bit of time off and maybe spent some time with their families. But thank you for joining us today. Just a few logistics here. We do have all of the phone lines muted. So if you do have any questions, hopefully you're familiar with the GoToWebinar panel here. There is a questions dialog box that you can enter your questions into. And as they come in, we'll try to get to as many of those as possible as you throw those at us. But we'll also have some time at the end of the presentation to address any additional questions as well at that point. I think this is on the calendar for about 60 minutes total. I think our guests here, I'll introduce them here shortly, have somewhere in the 40-45 minutes of presentation. So we do have a good amount of time there for additional questions as we go through. So just to briefly introduce the topic, exemption certificate management. This is something that we get asked a lot on the Tax Connect side, both from our clients as well as prospects. And it's always something that's a challenge for people to determine the most optimal way to manage the exemption certificates. I'm sure if you've been through various audits before, this is often a sticky point for you. But what we did here at Tax Connects is really evaluated all of the commercially available exemption certificate management solutions. And we really felt that CERTifyTax was the best option here for our clients. And that's who I've got here with me today, or a couple of gentlemen from CERTifyTax. But we looked at it in terms of, functionality, integration to the tax calculation systems, just overall expertise. And also, I just like Ray and Tom, so that was a factor as well. So let me introduce both Ray Diaz and Tom McCarthy here. From CERTifyTax. With this being an expert view, I'm just going to turn the conversation over to Ray and Tom, let them run with things on their side. I'm going to monitor the questions as you guys answer those, or excuse me, as you address those to us. So you might hear me once in a while just chime in with those questions, but I'll pitch those to both Ray and Tom to address for you. So Ray, go ahead and take it away on your side, or Tom, I'm not sure if you're going to start, but the floor is yours.
Thanks so much, Brian. And I think that's a first, somebody liking both Tom and I at the same time. Usually it's one or the other. So appreciate the kind words there. And thank you all so much for joining this afternoon. We really appreciate it. So I'm Ray Diaz, state and local tax attorney for the last 16 years, run the day-to-day operations of CERTifyTax. I'm still involved with some audit defense work as well too, specifically related to exempt sales and exemption certificates. Also, we've got Tom McCarthy, who was our CEO and founder. Tom is also a practicing attorney. He's still actively engaged in audit defense work on a number of different issues and certainly on the exempt sales issue. So kind of getting into why are these documents important? We're all probably aware that they are a hassle and a pain to be dealing with, but we know ultimately the reason why we're doing this is to satisfy the fiduciary duty that we have to collect and remit sales tax on behalf of the state. And in those transactions where we do not, we do have a responsibility to collect fully completed exemption certificates. And, why it matters to us is because, as attorneys, we're very used to, on the purchase side, looking at purchases and looking at the use of certain items of tangible personal property or services and apply the law to the facts that we have. Generally, those types of transactions involve the intersection of the questions of law, or rather the application of the law to the facts in front of us. When it kind of comes into the exempt sales arena, all we have are questions of fact. right? And whether that certificate, do you have a certificate or not? Is that certificate appropriate for the exemption being claimed? One of the examples that I like to give is if you guys have sold to nonprofit organizations, sometimes they like to send the 501c3 determination letter. You may get W-9s on behalf of certain resellers as well too. And then if you have the proper document, what you're looking for is a document that meets all of the requirements, statutory requirements, the regulatory requirements of the jurisdiction where you've accepted that certificate, ensuring that the proper name of the seller is on the form, ensuring that it's signed and dated, that they have checked the box that they are reselling tangible personal property, or that the item is exempt from the manufacturing or for manufacturing purposes because it's predominantly used in that manufacturing process. And
as Ray said, this is one of the really frustrating areas in the tax controversy space. And it's frustrating because oftentimes as a representative or when you're representing your company and you get an audit, as Ray mentioned, it's all facts. And so if we have good facts, we have a great case. And if we don't have good facts, we're in serious trouble. There's no articulation, there's no argument. In fact, you'll see that, and as you observe, as you read tax dailies and tax updates, there's really scant litigation around exempt sales. And the reason that there's scant litigation is taxpayers don't have great arguments. And so what we do have is the ability to control the facts. We have the ability to go into that audit with great facts. Oftentimes we stumble into those audits with subpar facts. So what we're going to talk about today is how to control those facts. This is all about controlling the facts, and controlling the facts before the auditor asks the question, we get the right answer.
Yeah. And, by controlling those facts, what it allows us to do is mitigate potential audit exposure. We're going to talk about how we've seen companies be proactive in that area and perfecting historical certificates, and really talking about business process from beginning to end, from the acquisition of the certificates all the way through the audit. So as Brian had mentioned before, we want to keep this as interactive as possible. So as questions do pop up, feel free to shoot them over. There's no need to wait for the end. We honestly love to get questions when we're doing this. So I think it's a really good time to be thinking about what you've historically done for exempt sales. If your company has been acquisitive, it's a good time to check and see what the company that you've acquired, how they have historically done with reviewing those certificates. And the reason for that is because we've got the kind of a perfect storm of regulatory headwinds and states with budget deficits combined with the Supreme Court's decision in Wayfair kind of converging together to create the lowest of hanging fruit for state auditors, which is to go after the exempt sales and evaluate them. And why is that? It's because the state auditors know that historically there haven't been good systems to deal with verifying and validating the certificates on file. They know that at best companies have a centralized repository, but how do you go about ensuring that the documentation that you have on file is accurate? So our good friends at Tax Connects had conducted a survey back in 2020 where 66% of the tax professionals surveyed mentioned that they've seen or experienced an increase in the number of exempt sales audits. Additionally, 78% of those tax professionals said that they expect that to increase in the future, and that's our experience as practitioners as well too. Our experience with our clients is that they are being asked for the exempt sales and the exemption certificates, in addition to those auditors really vigorously reviewing the exemption certificate for validity. So it's kind of like I said, the convergence of all of these external factors that have these state audit teams really focused on reviewing the exemption certificates for accuracy. I mentioned the Wayfair effect, and the decision in Wayfair there, what it really did was kind of shifted the focus from under accruals of use tax and shifted that to the collection of the sales tax, because now you've got more vendors that have nexus in these jurisdictions. And you know what the states are saying is we've kind of lost this revenue producing part of the of our audits by looking at the under accrual, and let's go now be more focused on the exempt sales.
Right. It's important to think about state taxing authorities as a business, because to some degree they think of themselves as a business. They have revenue goals. The state relies on the audit function to generate a certain amount of revenue every year, and they project that revenue. And if we think about what happened as a result of Wayfair, and we think about it just sort of nationally, I think what Ray was referencing is the sales tax pie has gotten bigger and the use tax pie has gotten smaller. Historically, the biggest revenue raiser on audits for state taxing authorities has been audits of use tax. Because that use tax pie is shrinking and that sales tax pie is growing, it's very likely, and we've already seen this happen, that states are going to be more rigorous about auditing sales tax collection. And what we know is that on the sales tax side, exempt sales is far and away the biggest issue and will become the biggest overall issue from a sales and use perspective. So we see this increased focus on exempt sales. With that, we're going to see more audits and we're going to see more rigorous auditing by state taxing authorities. So a certificate that was imperfect in some respect 4 or 5 years ago, probably, you know, the auditor would note that, but we may not get an assessment related to it. Now we're almost certain to get an assessment related to an imperfect certificate. We'll talk a little bit more about what those imperfections might be, but the burden has the burden has become a bit heavier for taxpayers, and the standard by the sort of nebulous good faith standard that we're all held to, somehow that bar is raising.
Hey, Ray and Tom, I'm going to throw a question your all's way here, and I'm sure you've seen scenarios where clients are less than proactive in managing these certificates, and they get into an audit, and now they're trying to scramble to get certificates for the prior periods and backdate them and try to. What are some of the risks of that type of approach to this, and can you even get backdated certificates to cover you from an audit perspective? What are your thoughts in that area?
Yeah,
and it may be something you guys already had targeted to address, but I know it's a question that always comes up.
Yeah, no, Brian, it's a great question. So, you know, from a statutory perspective, many states require that the exempt documentation be acquired contemporaneous with or prior to a sale. Some states give a time period after the sale to acquire it, but it's usually a fairly short period. As an administrative practice, most states permit taxpayers, even when they're under audit, to go back and require certificates. But notably, states have begun to put collars on that. We see it in New Jersey, we see it in Texas, where there's a set period of time from the beginning of the audit, you'll get a notice, and then you have 60, 90 days to gather that exempt sales documentation. It's problematic in any respect. Even if we were given all of the time, it's problematic because, you know, your sellers, when you make a sale, you can track down the customer, right? Because the customer is present at that point in time. They're making a purchase. Those customers may go out of business. They may not be reachable. Our contact information gets worse over time. So with the time pressure of the audit, combined with sort of the corruption of our customer pool, we find that it can be difficult. It is safe to say that it's best to be very proactive on acquiring certificates or perfecting certificates for historical customers. Because if you don't, it can become just unbelievably burdensome to do that under the pressure of an audit.
Yeah,
Yeah,
I would say that
makes sense.
Yeah, I think there's, as Thomas putting it, there's so many different ways to kind of address that, between the scrambling and the utilization of internal resources of the tax department, trying to hunt those down, making the phone calls, even to the as Tom was mentioning, you may have customers who've gone out of business and it's going to be impossible to reach them. So I think that, not only is there, I'm a nervous guy, so not only are those nerves kind of heightened because we're scrambling to get the documentation, but also just the amount of work that goes in it. So, there are tools in the marketplace, specifically, tools that we offer that can go ahead and do that type of historical analysis, not only in identifying where you have missing certificates, but where companies may have accepted a certificate that is imperfect, that does have the potential for generating exposure and liability, and we'll talk about that in a few minutes. But
we'll talk a little bit about best practices, but one way to think about this problem is if you put in a new system today for acquiring valid documentation for new customers, how long is the timeline before you can feel comfortable? And the timeline is actually quite long, because if 5% of the customers that you sell to are new customers in a given year, 95% of them are historic customers. And so even if that process that you just put in place now is great, and the new customers, we feel great that we have valid documentation, the best practice is to have a way to go back and reach out to those historical customers, because 95% of your sales are going to be made to those historic customers. So we're fixing it, but we're fixing it slowly, kind of 5% at a time, if we don't address that issue of what resides in that historical base of documents.
Yeah, which kind of ties into the next bullet here, just in terms of the amount of audit revenue California has generated. Surprising to us, $600 million for fiscal year 20 to 21 on just improperly documented resale certificates, right? So kind of to that point is, historically, it's been a Pandora's box of what corporate taxpayers have on file, and just how the validity of the certificates to support those exempt transactions. Additionally, we see that inadequate records have also led to major deficiencies, specifically on these exempt sales. And the reason why I bring that up is Tom mentioned earlier that 4 or 5 years ago, it generally wasn't such a big, I don't want to say it wasn't a big deal, but the audit teams were more reasonable, I should say. All right, you're selling to Costco. They're certainly a retailer, a wholesaler, right? All right, we get it. Now we see the state saying, yeah, but you don't have that piece of paper. I get it's for the Little League, but you did not accept the proper documentation. So these assessment figures are certainly increasing. And
well, they're going to increase. I mean, I'm sure everyone watching can do this math. 600 million in collections in 2020, 2021. We see how the budget deficits in a post-COVID environment have spiked dramatically. And we know that through rigorous audit activity, the states are well aware, and this is, this just makes sense for the states. They're well aware that by tightening the screws on the accuracy of documentation assessed, and by doing more exempt sales audits, they are going to raise more revenue, and they're going to do it quite efficiently. Again, because there's no law, it's just facts. So this is California just auditing resales when they're auditing partial manufacturing, or maybe even if legislation goes through full manufacturing exemptions. We know that documentation is going to be just tremendously important in California. We throw California out just by way of example. This is true anywhere where there's sales tax imposed.
Right. So now we've kind of gone through what the current environment is. Let's talk about the best practices for preparing your company for audit and really getting cleaned up here. So as Brian was mentioning, we're firm believers in being proactive in this space and doing an analysis to kind of review the accuracy of the certificates. We'll get down into that a little bit more, and maybe, let's just go with it now. When we're talking about the internal controls and assessing risk, what we're really talking about is performing a review of the existing exemption certificates, as well as doing a reconciliation for the exempt sales that you've made to those customers for your open audit periods.
The very first problem that we found when we really dug very deeply into the world of exempt sales was just a pure lack of transparency. So companies, from mid-market companies to the absolute largest companies in the world, could not really tell you with any sort of level of certainty what an accurate reserve might be, what their exposure might be on a state-by-state basis, on a business unit basis, on a customer basis. It's very difficult to know. And the reason that it's difficult to know is it's hard to see into those pool of historical certificates that we were talking about. It's hard to know what's there. And so there's a real barrier to having clear visibility into the problem. And as we all know, it's very difficult to solve a problem that you can't see, that you can't understand, that you don't know the financial magnitude of. It's just difficult to go about solving it. You can't see it.
Right. So in bringing about that transparency, we thought it was important not only to get the results and determine where you had good certificates or bad certificates, but to quantify the potential exposure on a state-by-state basis and get as granular as to which customers were generating the greatest amount of potential liability in each jurisdiction. The reason why that's the way that we think of it, right, is if we know that our client is in a regular audit cycle with the state of Texas as an example, we don't want that initial, oh gosh, they're going to begin the audit again, I wonder what they're going to find. We want to put our clients in a position to know exactly where that exposure may lie and quantify that.
So our recommendation with regard to this point is that either find a tool that can do this in an automated way, or if your volume of certificates is fairly low, find a way to staff that so that you can have those certificates reviewed manually, whether that's through a service provider or whether that's through internal staff. Take a look at those documents that you have and make an assessment as to whether they're valid or not. If you have an invalid document or if you're missing documentation, there's no better time than now to go out. It's a problem that's not going to get better with time. The right time to go out and get it is to get it now. So either through automation, through hiring outside advisor or consultant, or through use of internal staff, the best practice is to review those existing certificates for validity and to make sure that all customers with exempt sales have documentation on file.
Right.
Hey, Tom, as you talk about those different options, are there any rules of thumb in terms of, hey, once you get to a certain level of exempt sales, as a percentage of your sales, as a number of certificates, any rules of thumb where you say that company really needs to automate this versus, yeah, you can kind of get by with just doing it manually in-house?
No real rule of thumb on that. The best practice is really to automate that process. That really is the best practice. If we're really talking about a handful of certificates, then that might be something that's manageable. Certainly, if you're getting over 1,000 certificates, that becomes burdensome. And as a general rule, when you're getting that type of documentation, what we're talking about is quantifying that risk. But we sort of know something's not right. If we have 1,000 documents on file and we don't have a good system to make sure that that documentation is accurate and meets all the requirements of all the jurisdictions, that's trouble on the horizon. So we may not have felt the audit pain yet, but I wouldn't feel comfortable about that. I wouldn't feel like the past is predictive of the future. We know the regulatory headwinds. We're well aware that there are going to be more audits, and the audits are going to be more difficult in this area. So getting out ahead of it is most important. It's critical, and automation tools really can be helpful. You know, for any sort of scalable company, it would be very helpful to have automation.
Right. Yeah. Yeah. And I think, Tom, you make that's something that we see all the time with people is that, yeah, it doesn't seem like they've got a lot of volume. Maybe they have 800 or 1,000 certificates, but they're like, now I've got to be an expert in all of these different jurisdictions and know which form. And gosh, the Iowa form changed last month, and I've been collecting and accepting the old form. So really, all of those things kind of play into the evaluation of when you really derive the benefit of full automation. A lot of different factors that can go in there. Kind of lastly on the financial side of things is the creation of more accurate ASC 450 reserves as well too. That's something that we've seen clients utilize, whether it's a consulting group who's doing that, or utilizing software and automation to be able to really get it to the most accurate number for financial statement purposes. The other best practices, right, is streamlining the customer experience. And to me, this is something that is really critical. You want that customer to be able to submit documentation in whichever method or manner they'd like to. If you're dealing with farmers, they still like to use the fax machine. If you're dealing with kind of younger or kind of tech savvy people, they may want to grab a screenshot or a scanned image with their mobile device. Or we have other customers who just want to upload their exemption certificate because they've got a packet and they know they're going to fill out the appropriate name. So the easier you make it for your customers to provide the exemption certificates and comply with kind of the production of giving the certificates, the better off you're going to be. You're going to get more certificates. Specifically,
as a general rule, we're tax people, and we need this documentation, and we're able to articulate to the business folks why we need this documentation, because a bad number is gonna hit their P&L if we don't get this documentation for them. But we always have to be conscious of not being disruptive to the sales cycle. We always want to be fully accommodative of onboarding new customers. And so in that regard, having as many options as possible for acquiring the certificates helps us not only get as much compliance as we can, get into the best position that we can for audit, but it also helps us with our business partners.
Right. And having these different methods and utilizing automation also allows, one of the benefits is the faster turnaround of that customer being able to purchase exempts. There's no waiting period for the certificate to be reviewed, and it's 24 or 48 hours after the customer's provided the certificate. Through the automation, you're really able to, as Tom was saying, catalyze the sales cycle. You think about it, if you have brick and mortar locations, you certainly don't want those lines being backed up. And lastly, the risk of shopping cart abandonment during and after COVID, the online sales and e-commerce platforms have really taken off. And if your customer's experience is they're filling out all this information, they indicate that they're exempt, and they're being brought out to another platform and being brought off that site, you do risk losing that customer and having them abandon their shopping cart. So the customer experience is one that it probably wasn't the most intuitive for us at the outset here, but now we definitely understand the importance of that. And then ultimately, the other best practice, increased compliance, right? And what do we mean by that? By leveraging either technology or having a tax professional review the exemption certificates or some good processes, in place to review the certificates, you're able to ensure that the documentation that you've accepted is accurate, will support that exempt sale. You're able to, you really need to be conscious of taking and extracting information from the face of the certificate that becomes relevant down the road, such as a reseller permit number in states where you may statutorily be required to verify that number. In addition, extracting the date that you've received that exemption certificate so you can accurately track the expiration period. The Florida DR 13 always comes to mind as one that we're constantly reviewing. And also, for our friends in the telecom space, you have the regulatory, the annual FUSF filing as well too. So all of that, again, our recommendation would be to either utilize software or dedicate a resource that is going to be very diligent about reviewing the certificates and getting the information that's required to most efficiently and effectively manage those exemption certificates.
So Ray, as you're describing that, there's a question from Brandy, and I think you probably really hit exactly what she's asking here, but I'll just throw it out to see if you had any additional thoughts. So Brandy asks, so what is our due diligence requirement when it comes to forms? I've had customers send only page 1 or however many pages, and the fine print for each state can vary. Any additional comments or thoughts on that question? I think that probably the key is that it varies by state, as everything in sales tax does.
Yeah, it varies by state, of course. It also varies by form. And Brandy, maybe you're talking about the multi-jurisdiction certificate. It's got a whole bunch of states listed on it. Then you've got 33 footnotes going there about all of the different exceptions. Yeah, we're going to talk about the good faith standard. Maybe this is a good time to kind of switch into that. But Brandy, like, your experience is not uncommon. And what does it mean to perform due diligence? It really is, for us being conservative, it's doing as much as you possibly can to ensure that you've accepted a valid certificate and are applying it appropriately. I think
in terms of like the way we think about it from a software perspective, is we've built out the sufficiency rules for each jurisdiction, including home rules and parishes. We've built out the rules of sufficiency for each jurisdiction. And Brian said it, and it's not a surprise to anyone on this call, but those rules vary by state. And what's required in one state differs from a requirement in another. We've built that out so that that's done programmatically. My recommendation is, if you're not using a commercial software that makes sort of that qualitative analysis on your documentation, there are some smart chart tools available that are helpful in that regard. But you want to make sure that you're meeting the requirements for that individual jurisdiction. I recognize that this is burdensome, and I sat in the Supreme Court, I'm proud to say, for the Wayfair argument, and that's kind of what this is all about, right? It's all about the burden on the seller, and unfortunately, our burden is quite high.
Yeah. So kind of in that same, and Brandy, thank you so much for the question. Along that same kind of reasoning and thinking about this, a lot of what you're looking to do is really control the different moving pieces at every corporation. It's funny, like, this really is an intersection of, you've got your sales teams out there, you've got your billing team, you have your credit group, you've got the tax department, all of these different groups coming together and handling this. So really the best way to approach this is to have very clear plan, very clear delineation of which group is responsible for moving the certificate along the process. If you're not using some type of software, right, you really want to ensure that there's a clean handoff. And even if you are using software to deal with this, you need to ensure that the data that you're receiving is appropriate. So, right at the outset here, what you really need to do is determine what the workflows are going to be. And those workflows, like I said, are from customer onboarding as to when they get the exemption, to how that exemption is going to flow into a determination engine if you're using it. And as we were talking about the determination engine, what we really want to be focused on is the interoperability of the different systems in play. You may have the sales team and the credit group who are using the ERP system, so an SAP, an Oracle, a Dynamics, or even a homegrown system. And ensuring that those customers are flagged as being exempt. That's our best, in our experience, that's the best way to do it is, okay, let's during the onboarding process, allow the customer to claim that they should be treated as exempt, but not to actually exempt them until we have valid documentation on file.
Yeah, so that would be a bad business process, and it's one that we've seen, and it's one that we've remediated, where the customer self-identifies the exemption and then is treated as exempt on the belief that the documentation is coming at some point in the future. And unless there's a real rigorous way to follow up on that, oftentimes what happens is that documentation never shows up. So we talk a lot about the validity of documentation. Now we're talking about the existence, the actual existence of the documentation, and it's not a given that those documents are coming. So that's
right.
that would be a really weak process.
Right. Right. And then, with other companies that we've seen who have kind of a more stringent process up front is that, yep, they've claimed exemption. We're not going to give them the exemption until they give us the exemption certificate. That may be days afterwards. It may be 24 hours until that customer receives a notification to provide their exemption certificate. The closer to real time you can be, at the outset of onboarding that customer and acquiring that certificate, that certainly is the best practice. So whether that is a customer who sends in the certificate and it goes directly to a dedicated team who can review the certificate in a very timely manner and apply the proper exemption in the determination engine, that's certainly a good practice. To the extent that there's a willingness to kind of embed automation in that customer onboarding, that really is kind of the best practice, because we can then accept that certificate in real time and send that determination over to the tax engine to apply the exemption.
I mean, we're in the software business, right? So we're real believers in automation, but if you're going to invest in automation, have automation. Like, don't go part of the way there. So we believe that this process should essentially be in its best state. It's essentially touch-free. So the only time there should be human interaction is if there's a problem. But you want a way to acquire that documentation from the customer, to outreach to the customer in an automated way. When your systems tell you that the documentation submitted by the customer is inaccurate, or it's the wrong state, or it's the wrong form, you want, in an automated way, outreach, no touch. The machine knows, the machine reaches back out to the customer and says, hey, you sent us documentation, it was wrong for the following reason, like it wasn't signed. And we all know how often that happens. We have a document, but no one signed it. So we want all of that to happen in an automated manner. We want that validation to happen in an automated manner. That's like the best case. This can be done sort of through manual processes. It tends to be costly to do that. It tends to be, somewhat inaccurate. You need really that whole rigorous library of rules that we talked about before in response to Brandy's question, and it tends to be slow. And those are the opposite of what we want, right? We want efficient, we want fast, we want accurate. And so the best solution is this automated software type solution. If you don't have that and you don't have that in your budget, the best thing to do is try to mimic those steps as best you can through manual processes.
Right.
And guys, I can't tell you how many times we see clients that send out an invoice with tax on it. The tax is due the following month. Client reports the tax, and then the customer short pays that invoice and says, oh, hey, by the way, here's my exemption certificate. And now the tax has already been submitted to the jurisdiction. And I'm sure if they have like an easier way of getting that certificate up front, you eliminate that issue. And we've seen scenarios where those credits build up over time and you lose the statute, and it can become a significant cash flow issue for clients as well.
Yeah, so we think of that credit back scenario as a sequencing problem. And you hit it perfectly there, Ryan. Like what we want is we want that identification, that self-identification of the customer as exempt to happen in the onboarding process. And we want to help put tools in place to make that easy for everyone to make that happen. And then have that outreach process begin right then and there. And it's just so much cleaner. One, I mean, I like it because it's compliant with the statutory requirements, but I also like it because it's efficient from a business perspective. Credit backs are just nasty to deal with.
Yeah, we've done a lot of work with the credit groups in dealing with that and minimizing those types of scenarios. So Brian, that is a very common experience for when folks aren't using that, and it does become a headache.
Now here's where Ray and I get crazy, because we have a little bit different view of the examination process and of state audit groups, and we really think that there's a right way to do this, especially with regards to exempt sales. And before we get into it, we've discussed this, but just the framework of this is really a facts only analysis. So we're not typically arguing about interpretations of rulings or cases. So number one, it's all about the facts. Number two, the standard that we're generally judged against is a good faith standard, which is every bit as nebulous as it sounds. Like, what the heck does that mean? So we think of somebody said due diligence or operating with due care. We think of acting responsibly in a fiduciary capacity. That's what we think about. And so we think of that audit group as a stakeholder. So they're very important players in this process. We have your customers are stakeholders. Obviously, the internal tax department are stakeholders. But those government auditors, look, for the most part, they're just people doing their job, right? So what we have done is we've worked with audit groups to try to find out, how do you want, like, what is the best way for us to give you feedback? What is the best way for us and our clients to be responsive? And we have created reporting mechanisms that essentially are in the format that these auditors want. Ray and I are going to meet with 10 departments of taxation, state departments of taxation this year, to walk them through kind of how we do the process and ask them if there's anything else that they want us to do in terms of validating documentation, make sure that documentation is used appropriately. Let me just take a little bit of detour about how that document's used appropriately. So one of the mistakes that we see in terms of exempt sales in general is the application of exempt sales documentation when there's an exempt use. And so if we think about, let's say a state has an exemption for building materials, and someone goes into a big box home improvement retailer, and we have a purchase of building materials, they have a valid exemption certificate for the building materials, but they get to the register and they buy the building materials, but they buy a few power tools, and they buy a few power bars and a few power drinks, and they check out at the register. What's going to happen at that point of sale? Because I know what should happen. What should happen is the building materials should be exempt, but all the power things should not be. The power bars, the power drinks, the power tools, they're all taxable. And so when we think of another part of your task is, one, there's the documentation, but when Ray talked about that interoperability, we need to make sure when that cash register works, right, that it's exempting only the right items. only the right items. So we think about that entire process, and when the auditor shows up, we want to articulate how we've thought about all of that. We want to articulate how we've thought about acquiring documentation, but also making sure that the documentation is valid, to make sure that the taxpayer ID number is right, to make sure that the document is filled out properly and that all the essential information is there and it's signed and dated. And what we'd really like to do is to sit down with that auditor at the very beginning of that and explain our process. Why? Because of the good faith standard. And because the good faith standard is ambiguous, we want to show, and your task is to demonstrate to that auditor that you have good processes around this issue. Because essentially, that's what we're dealing with. We're dealing with a business process. And so that auditor, that audit team, they can be our allies. They can be helpful. And so when we show that we're doing more than the average taxpayer, when we show that we take this issue very, very, very seriously, we get a wide range of latitude. And when you have a healthy, rigorous process, you have nothing to hide. You want to explain that process to the auditor right away. You want them to understand that you're taking this seriously. Listen, you're listening to Ray and I prattle on about this issue, right? So you wouldn't be on this call if you didn't take exempt sales and exempt sales processes seriously. And you want to convey that to the auditor. You want to have a tangible process that you can explain to the auditor, your audit team, that you've taken this seriously. Then get down into the brass tacks of what is their request, what transactions, what exempt customers that they want to look at.
Right. Yeah, and I think with that,
got a couple questions here that I can throw your guys' way. Thank you for the presentation thus far. Appreciate that. So Susan has a question here in terms of the how long is a certificate valid? Again, I'm sure it's the depends on the state answer.
It does.
That is going to be the answer. Yeah, but I mean, Ray can give you some examples of it's just sort of the range from evergreen to really short lives.
Yeah, so there are certain certificates, New York certificates for resellers, they never expire. You'll have resale certificates from Florida or Arizona, New Mexico that expire. Well, Florida specifically annually, New Mexico and Arizona within a 12-month period. You also have an inapplicability of an exemption certificate for a reseller if that reseller has not made a purchase from you in the preceding 12 months. So that's also something that you need to be aware of and track. So it varies. It's always the best answer for state and local tax practitioners, right? Is it depends. But I think the nice thing about either dedicating a staff resource, whether it's in a smart chart or if you're leveraging automation, is really having those rules embedded into that automated process and ensuring that you are tracking the expiration periods, the statutory expiration periods for each jurisdiction and each form. Sometimes a form in a particular jurisdiction for a reseller may be evergreen, but the nonprofit exemption is for a period that's specifically indicated on the document that the nonprofit received from the Department of Taxation.
Hey, Ray, can we say a word about best practices there? Because we have a viewpoint on this issue as well. And I think, we believe that periodically forms should be refreshed even if they don't expire. So we have a client in New York, Ray mentioned that the forms are evergreen, that has certificates that are literally 50 years old. And we think that's somewhat extreme, but we think that it's unwise. And we think that the best practice is to renew certificates. We recommend either 3 or 5 years, depending on the business type. And if we just think about like the telecommunications space, in the telecommunications space, companies merge all the time. And it can be so problematic when you have you make a sale to a customer, they have one name, and you have exempt sales documentation in a different name, and that company was sold, renamed, merged into another company, we all know how that works. And so we believe that there are several good reasons to go out and refresh those certificates on a somewhat regular basis. One of the sort of just, really just operational reasons for it is when we go out and refresh certificates, we get a contact person. And that contact person is generally going to be somebody who has some tax responsibility, hopefully indirect tax responsibility, hopefully sales and use tax responsibility, but they're a great contact resource for us to have. When we send out communications to our clients, customers, we request email information. And we do that a little bit of data harvesting, but we do that so that we have a real good point of contact, so that when we need new documentation or we need documentation to refresh, we know who to reach out to. That's a great question, Susan.
Yeah.
I think we might have a poll question to pull up here while we address a couple of remaining questions from the audience, but we've got one here about whether the exemption certificate is based on the customer location or the seller's location. And I'll add to that in terms of if a customer has multiple ship-tos, what do we do in that scenario?
Yeah, so the exemption certificate needs to be generally obtained in the state in which the transaction, the actual sale, was made. So as an example, you may be headquartered in Texas, but you have received property in New York, and you're a reseller. So New York would require that you've collected a New York resale certificate on behalf of that purchaser. Multiple ship-to jurisdictions is something that we see all the time. Depending on the nature of your business, the most appropriate method is to certainly, you need to obtain an exemption certificate to support the exempt sale in each of those jurisdictions. Whether that's a multi-jurisdiction certificate or if it's the state-specific form, that's what that audit team is going to be looking for. When they come in, they're going to see that, hey, you made a transaction here, you didn't charge sales tax. Why not? Well, they're exempt. Great. Provide me the documentation that is applicable in the specific jurisdiction for which you're under audit.
Ray, you want a quick word on drop shipments?
Yeah. That's kind of where I was going. That's why I used the word generally in there.
The general rule, here comes the exception to the rule.
Yes, absolutely. So for those of you who enter into drop ship transactions, there are rules that do permit an out-of-state reseller to use their home state resale certificate, and that would suffice as proper documentation for that exempt sale. Now, of course, it depends on which state's accepted. California, as an example, does not allow an out-of-state certificate to support an exempt sale for resale in California, whereas Ohio, definitely, they'll take the California Form 230 in place of the Ohio Stec B, as an example.
And our software solution has those rules embedded in,
right? So
that there's, again, it's no touch to apply those rules.
Yeah, that's a great clarification on the drop shipment. So I'm glad you brought that up, because I feel like there's probably 10 or 12 states that kind of act like California that you were describing, Ray. Yeah. Maybe it's increased, but yeah, there's at least some of them that you can use that home state. So that's a good point. Looks like the last question we have here from the audience is from Michelle. Is it wrong to assume that schools are exempt?
It's not wrong to assume that schools are exempt. It would be wrong to not collect the required documentation from those schools to support the exemption that you applied on the invoice. So schools are, public schools, generally exempt. I can't think of a jurisdiction where they are taxable. Educational institutions, not-for-profit educational institutions generally qualify. But this kind of highlights what we were saying before. Like, I remember a decade ago helping Tom out with audit defense work and placing less importance on a sale to, let's say, a municipality. And now there have been recent rulings in Virginia where the tax was applied on purchases from a municipal fire department because the auditor said, yeah, they're exempt, but you had a requirement to to obtain that documentation and you didn't. We're assessing tax. So,
and this is an issue for sellers of scholastic books and school supplies. And, we just say it one more time, this wouldn't have been an issue 10 years ago, but it is an issue now. And I greatly suspect that it'll be an issue 10 years from now. So, there was a time when you I think could say, look, I sold this to the University of Notre Dame, and someone would say, well, it's a university. Those days are over. They need a certificate the same way that contractor who walked into the big box retailer needs a certificate. If you don't have it, you're at risk of getting assessed, even if all of your business is exempt.
Right.
Yeah, and this what I'm going to say might be the only thing that I don't qualify with a generally or it depends, but we always recommend that you charge the tax unless you've got the exemption certificate. Otherwise, as both Tom and Ray have described, you're at risk, and you get into an audit, and then you get sample periods, and it gets projected out over a period of time, and now you're dealing with a significant audit issue. So that's the only for sure certainty that I will describe from a state sales tax perspective. But with that, we'll close it out here. Thank you so much, Ray and Tom, for joining us. I hope the audience found this helpful and beneficial to them. Again, appreciate the audience for joining us and sending out the questions as well. Anything that we didn't get to, we can follow up with offline. If you did respond wanting follow-up based on the poll question, Ray or Tom will reach out to you directly. So thank you, everyone.
Thank you.
Thanks so much. Take care.